Hey guys, this is Karthika Kantwal from Apex Finsav, and we're back with your daily dose of equity charts and the indices too. But before we move on to the trades, new trades for tomorrow's trading session, talking about today's expiry. Coming to the watch list section, it seems that we are going through a drawdown period because again we had a red day today. We closed in negative of about 2.2% if you include the brokerage and other things as well. But when it comes to the indices, it was more or less a range bound day where the price was stuck between the zones that we had plotted. So all in all, as I said to you guys yesterday, if there was a breakout outside of that range, take a trade in the direction of breakout. If not, wait. So I hope you guys followed that and ended up in the green today as well. For us, our personal trading, we had a good day when we talk about the currencies. We had good trades in GBP INR. We caught both the short and the longs. And when it comes to the indices, we didn't really have a lot of heavy trades there. But overall, it was a green day for us. Not something special, mild green, but it was green. And I hope the same goes for you as well. Now, coming to the trades for tomorrow's trading session, starting with the first one, as usual, SR Transfin. Now, SR Transfin, it is more or less the exact same trade that we had for yesterday as well, or for today rather. So the idea is to go for a long at 675, stop loss at 665, target at 1% for a reason of entry. You might as well check that video of yesterday as well, because it's the same thing. We had buying pressure here, which we had two similar swing highs. So the lower low lower high formation that was supposed to be completed is not something that is being carried on today as well. It has not made a new low. So the idea now is to go for a conservative entry at the subsequent swing low at 675. Moving on to the next one, Apollo Hospitals. Now Apollo Hospital, we went short today, and this was a stop loss hit because we were anticipating that it is going to continue this lower low lower high recent structure formation, but that is not the case. It has broken out of that, and if you look at the immediate candle structure formation, then it has also made same highs, but it has made a higher low as well. So if you keep that in mind, then the lower low lower high formation is more or less invalidated because there's a lack of new swing low and there's more or less the same swing high. So the buying pressure is starting to kick in at this point. So the idea now is to go for a long position at 1690, stop loss at 1670, ideal targets at 1% on the upside. Moving on to the next one, Just Dial. Now Just Dial, here again we are going to go for a long position at 385. We had, I believe it is the same trade that we had yesterday as well. We are going to go for a long position at the good demand zone that we have instead. Not good, but it is the only high quality demand zone that we have near the current market prices. So we are going to go for a long position at 385, stop loss at 380, and ideal targets at 1% on the upside. Moving on to the next one, PEL. Now PEL is as the same that we had yesterday. Buy at 1400, stop loss at 1380, and the ideal target at 1% on the upside. Reason being the same. It has acted as support in the past. It was broken and then quickly reclaimed every time there has been an impulsive move from that price point. So we are going to go for a long at 1400. Also a big round number might act as psychological support too. So the idea is, as I said, long at 1400, stop loss at 1380, and the ideal targets at 1% on the upside. Coming to the next one, IndusInd Bank. We are going to go for a long at 500, stop loss at 493, ideal targets at 1% on the upside. Reason being fairly simple. It has, if you look at the price movement at that point, every time it has interacted with said level, it has had an impulsive up move. Even the last interaction, that was more or less a touch and move up ahead. So the expectation is the same. It is pretty far away, but a conservative entry but high quality one. Let's see how that goes. As I said, long at 500, stop loss at 493, and the ideal targets at 1% from your point of entry. Coming to the next one, MFSL. MFSL, we are going to go for a long entry here, long at 527, because it has acted as support and it is a high quality demand zone. If you look at the impulsive move that originated from this point, it has acted as support before as well. It was broken but quickly reclaimed. So the idea is to go for a long at 527, stop loss at 520, ideal targets being 1% on the upside. Moving on to Oro Pharma. Now Oro Pharma, we are going to go for a long at 840. We might have gone long at the break of this trend line too, which you have if you plot this one, but that trend line is pretty steep, so that's not really a high quality entry. Now the head and shoulders pattern, the distorted head and shoulders pattern that I discussed with you guys yesterday, the neckline break should be impulsive, and that is not something that has happened today. It is more or less consolidating near the neckline. So let's see what happens if the market psychology forces it to come down. That is where we'll take an entry at the resistance turn support level of 840, stop loss going at 830, and the ideal targets at 1% on the upside. Let's see how this one acts out. It is quite an interesting trade, or quite an interesting chart rather. Let us know what is your opinion on Oro Pharma down in the comments below. Of course, I do recommend that you perform your own analysis before jumping on the watchlist trades. So do let us know what is your opinion on this chart. Moving on to the next one, Bharat Falls. Now quite funny chart this one. We have waited endlessly for this flag pattern to trigger, but well, it seems to me that it has become a supply zone rather. So the idea is to go for a short at 503 at the upper limit of our zone, and stop loss at 510, slightly larger because it has interacted multiple times with the zone, so it is possible that it might try to pierce through. So the stop loss is slightly wider. So the as I said, entry at 503 short, target at 1% on the downside, stop loss at 510. Now these are all the equity charts that I had to discuss with you guys for today. Now moving on to the index side of things without wasting much time, starting with Nifty as usual. Now Nifty, I told you guys yesterday this was the zone that it was in. If there's a breakout, then we had a 50 to 75 points move on either side, but we did not have a breakout. Now again it has closed at the zone, so more or less it was an option writer's expiry. I hope none of the buyers from you guys was caught on the wrong side of things today. But for tomorrow, well, my view is depending on this zone, we might see a move. If it's sustaining on the upside, then we might see a move all the way to 11360, 11340, sorry, 11360, 11375. If it's broken on the downside, we might watch it go down to 11250, 11240, because we have zones probably not probably, they are more or less equidistant from that price. So you have more or less the same movement pending on either side. Wait for breakout, and as I always say, wait for confirmation in the first 15 to 30 minutes of the market opening. Don't just jump into trades for the sake of it. Now when we talk about the option chain, we have since it's a new expiry, I would not advise you guys to rely heavily on the option chain. But still, when we talk about the option chain, we have immediate resistance at 11400 with about 800,000 added contracts, to be exact 791,000. We have significant resistance at 11500 with 724,000 added contracts. On the support side of things, we have immediate support at 11300 with 120,000 added contracts. Significant support at 11,000 with 313,000 added contracts. Now, just from this perspective, it seems to me that the writers are being far more aggressive on the call side than on the put side. So they are, not really that confident about the support levels being held. So if I talk about a bias from the writer's point of view, then it suggests that this zone that we have might be broken on the downside, and we might see this interact with the lower demand zone that we have at 11240. Let's see how that goes. Now, when we talk about the PCR for Nifty, the PCR comes out to be the PCR of volume, to be exact. It comes out to be at 1.04, which is again pretty bearish. That means the option buyers, they are bearish too. The option writers too, they seem to have a not exactly bearish. We have writers on puts too, but when we compare relatively, then they are not that confident about the support being held. So the buyers and the writers are pretty much aligned in the same direction. Let's see how that acts out tomorrow. Now coming to the next one, Bank Nifty. Now Bank Nifty it was more or less a writer's expiry with the open more or less exactly equal to the closing price. Now for tomorrow, I would say that depends on whether this zone is being sustained or not. If 21,900 is being sustained, then you might see it surge all the way to 22,100, 22,150, where we have the supply zone, upper supply zone. If that is not being sustained, then we have two stage breaks at 21,800 and 21,700. So it all depends on whether this zone is being sustained or not, which is something that you can come to a conclusion about in the first 15 to 30 minutes of the market opening, depending on the candle formation. Now, when we talk about the option chain point of view, then you have immediate resistance at 22,000 with 331,000 added contracts. Significant resistance at 22,500, which is pretty far away, with 200,000 added contracts. On the support side, you have 21,800 as immediate support, coinciding with the zone, with 100,000 added contracts. Significant support at 21,500, again pretty far away, with 105,000 added contracts. So, pretty much exactly like Nifty, the writers on the call side are pretty confident that the resistance is going to be held tight, but the put writers are they seem to be quite shaky about their stand. So let's see how this one goes. The option chain suggests that this zone might be broken on the downside rather, and we might see a move down to 21,750, 21,800. Again, this is just a bias about tomorrow's market. Whether to enter a trade in that direction or not depends on you and how well you are able to understand the first 30 to 45 minutes worth of price action on the indices. Now, when we talk about the PCR for Bank Nifty, the PCR of volume, it comes out to be at 0.81, which is in the mildly bearish territory. It's not as bearish as Nifty, which seems to be aggressively bearish from the option buyers perspective. So on Bank Nifty, the writers and the option buyers, they are not exactly aligned. So let's see which one of them pull through in tomorrow's market. As I said, for me it depends on how this zone at 21,930, 21,950 is being played out. If that is being sustained, and if you have a good buying candle formed, then you might as well take a long position. If that is being broken on the downside, then you might target 150 points move on the downside as well. Now, these are all the charts that I had to discuss with you guys for tonight. I hope you guys had a really good exciting green expiry today, and I hope you guys have an even better trading session tomorrow. And once again, if you have not subscribed to the new Apex unofficial channel, well, the link is there in the description below, so show some love there as well. And if you like the content that we are posting, the analysis, the index, and everything, all of it, then don't forget to like, share, subscribe, and comment. As I said, share your views in the comments with us. Thank you so much for watching, guys. And another thing, as always, if you want any of this content, you can always check out the Telegram channel @ApexFinServe, Instagram again @ApexFinServe, and the Twitter handle. The link of all three is also in the description below. Thank you so much for watching, guys. Have a good night. Bye.